I am joined by qualified accountant and the founder of Finance Matters UK, Fisayo Martins.
That was definitely interesting and a real catapult into the real world of navigating something as serious as paying my rent. I think it was a real introduction into what I like to call the start of my adulthood and just the realisation that I was responsible for all of these costs and there were real consequences if I didn't meet those obligations.
When this Renters' Rights Act comes out, what are 3 things they should be aware of?
I think first and foremost,
Hello everyone and welcome to the Bank of England's Money Matters podcast. My name is Jamila and I will be your host for 2026. This month we're going to be talking about interest rates and how they have an impact on young renters. This affects millions across the UK as housing costs, inflation and other economic factors continue to shape how people live, spend and plan for their future. Today, I am joined by qualified accountant and the founder of Finance Matters UK, Fisayo Martins. Fisayo is going to talk to us about her personal experience in real estate, provide insight into the rental market, and talk about the challenges that young people are facing. So, Fis, welcome to the Bank of England and welcome to the Money Matters podcast.
Thank you.
Thank you so much for joining us today. To kick off, let's have a bit of a chat about you and what you do.
Of course. Well, thank you for having me. It's an absolute pleasure to be here. So, by way of introduction, my background is actually banking and finance, so not foreign to this world at all. And I'm also the founder of Finance Matters UK, so a financial education platform that is dedicated to individuals and business owners on how they can make better informed decisions. I'm also a chartered management accountant by profession, so I am all in the numbers, but everything I do is founded on providing that trusted financial education lens for everyone because it does impact everyone.
Tell us about your experience in renting. What do you know about it? What have you done in your life? What have you rented? Where have you rented?
Well, actually, my first real experience of renting was going to university, if we're being honest. But I never acknowledged that as my first real experience because I feel like it was relatively comfortable. Everyone was going to uni. Everyone was maybe utilising student loan. Everyone was maybe living in the same accommodation. So it felt like a unified experience. Whereas what I typically refer to as my first real experience was moving away from home during my first year of working my first full-time job, and that was outside of London. And so I had to go through the whole process of researching somewhere to live, how close or far was it from the office, what that would cost on a monthly basis, coming to realise that you have to pay council tax, utility bills, which part of wasn't included in my actual rent price. So that was my first real experience. And that was an interesting one. I think it was a real introduction into what I like to call the start of my adulthood.
Okay.
And just the realisation that I was responsible for all of these costs and there were real consequences if I didn't meet those obligations.
Yeah.
That was definitely interesting and a real catapult into the real world of navigating something as serious as paying my rent.
Yeah.
So that is what I typically refer to as my first experience.
I think that's really relatable because, if you're going to university, someone's probably going to help you out if you've got no water coming through your shower, but suddenly then it's your problem if you haven't paid for your water. From your perspective, how has the rental market changed compared to when you first started renting? What differences are you recognising?
Oh, it's a very interesting one to describe. I think one way that I think about it is there's a desperation factor that's kind of quietened down.
Okay.
So a few years back, there was this market where landlords could put a property on the market for rental purposes and they would have 20 plus applicants maybe flocking to rent that property. So landlords had this real pricing power, if you will. They had this attitude of take it or leave it.
Okay.
And now what we're seeing as we navigate cost of living, individuals not having the income to suit the rental necessities, we're seeing a lot less applicants bidding for rental properties, right? So that takes away that pricing power that landlords have always sat on. And that's a very interesting market to navigate. Now, it doesn't necessarily mean that the rental market and the rental space is now in the favour of renters because they're navigating these cost of living pressures, but people still need places to live. So it's not exactly preferential for renters, but it's equally not as preferential for landlords at all. So it's this very awkward adjustment phase that I like to call it, where a lot of shifts are happening and that impacts both sides of the market.
Okay, and talk to us a little bit about these shifts then, because there's this new Renters' Rights Act coming in, I believe in May 2026.
That's correct.
So talk to us about what's going on here. What are the changes going to be coming from that?
Yeah, so the Renters' Rights Act is so crucial for individuals who are in the renting space. There are so many changes. I don't have the entire policy in my head, but there are a few things. Exactly. I don't regurgitate it at night.
Just recite it for us.
There are a few things that are going to be very, very crucial for renters and also very impactful on the lives of landlords. First and foremost is the no-fault eviction clause. So that is coming to an end, which means that landlords can't ask you to leave their premises for no reason at all. They have to have a valid reason. So that gives a lot more security to renters, knowing that they can't just be asked to leave the property within the space of weeks. There's also a change coming to the actual rolling contract. So it will now operate on a monthly rolling contract basis, which means that renters have a lot more flexibility for changes in their own personal lives, personal circumstances. It means they're not tied into long-term fixed contracts and allows them to have that flexibility of changes in their lives. Perhaps they want to move away, perhaps they decide to move back home, which many people are doing. So that's actually really promising. And the third thing I would say renters ought to be aware of that's coming into effect from the rights is that price increases are now capped to once per year, and it requires a 2-month notice from landlords. That is going to be so crucial because if you know anything about people who are renting, a big headache at the minute is the increase in rent prices.
Absolutely.
And also at a very immediate timeline, right? So now it's going to be capped at once per year, 2 months notice, which means that renters are able to best prepare for changes that are coming into effect pertaining to their rent. And they can also be rest assured that actually if my rent has just increased, I can sit tight knowing that this is not going to happen again for at least a 12-month period. So many policies coming into place, but really important that those top 3 are going to be so crucial for renters, and it's really going to adjust how landlords are also operating. So it'll be interesting.
Yeah, so as this is the Bank of England's podcast, let's talk a little bit about the impact of interest rates on landlords and how they kind of see these effects come through. Because for anyone listening who doesn't know, the Bank of England's Monetary Policy Committee, the MPC, meet 8 times a year to set the bank rate, also known as base rate. And this is the rate that influences other banks and lenders on how much they can charge or could charge on mortgages or loans. So for renters, a lot of landlords will be like their rental property will be on a buy-to-let mortgage. And if the base rate goes up, then landlords will start having to pay more every month. You can jump in if I'm wrong.
Yes, no, you're absolutely money on the ball there.
This means that the landlords start seeing increased monthly costs, and it doesn't quite come through to renters the same way it does to homeowners or the landlords, but slowly it will start to drip through, and renters will start to see an increased monthly cost as the landlords are having to pay more on their mortgage every month. So first, do you feel that people understand this dynamic between landlords having to pay more if the base rate's going up, and then they're seeing this reflection in their rent prices going up? Do people understand this dynamic?
I think some people do, but maybe on a surface level, and there's still a massive pool of individuals who don't quite appreciate and understand that real connectivity. And I think there's a reason for that being information asymmetry.
Okay.
So that's, in my opinion, where, of course, landlords, for example, they're on this fixed mortgage rate, and they will know when it's time for them to remortgage months in advance, right? At least 6 months in advance, because they will be preparing for that. But landlords don't have a real need or requirement to share that information with their renters. So they don't take it upon themselves to say, hey, I'm going to be remortgaging in 6 months and your rent price might go up.
If we go back to these changes coming in with the Renters' Rights Act,
Yes.
how do you expect landlords to be able to manage these rate increases when they can't just increase the rent for renters monthly? They're going to have to find other ways to make up that money.
What you'll find is, I think landlords will start to price in the possibility of interest rate changes.
Okay.
So let's just say, they're coming up to the opportunity for them to to increase the rent prices for their renters, right? They will probably bake in the fact that what if interest rates change again and it becomes more expensive for me to hold this property?
Yeah.
Not only am I going to increase the rent by £200, maybe I'll increase it by £300 just in case to have that buffer. So we are likely to see that being baked in by landlords. I think also we might see more landlords selling. They might be priced out. They might get to a point where the costs of having that property based on interest rate changes or even just general costs of maintaining the property are just too high for them to be able to increase rent prices and therefore stay in the market on that basis. And of course, that is dependent on their own personal circumstances. Maybe they have a property portfolio that allows them to have that offset property that's not quite generating profit, but it doesn't quite put them in the red. But sometimes they might not have that, and it might be in their best interest to sell the property. And other things that will impact this decision making also is just also rental supply. There might be so many other properties on the market, maybe in the same vicinity, that are available at a decent price for the renters, and therefore ex-landlord who is impacted by interest rate changes doesn't have that pricing power to say, I'm going to increase the rent by X amount, because said renter can say, well, actually, there's a property down the road that is this price and I can just go there.
Yeah.
So with the Renters' Rights Act, where they're going to have that 1 monthly rolling contract right, they have that flexibility to say, that's fine, increase your rates. I can literally move out next month and find another property. So it'll be very interesting to navigate for landlords.
Okay. And so when you were renting, what were the key challenges you found? Did you, obviously this was before this Renters' Rights Act came in, did you have any issues with quick rent increases? Did you have to move, or what was your experience?
I would say I didn't have too many challenges beyond the norm of navigating, looking after the bills and so forth.
Yeah.
Maybe a couple of my bills increased in that time, but I was renting for no more than a 12-month period. So I didn't have that longevity of, you know, my rent might increase next year and whatnot. Everything I'd locked in at the time was pretty static.
Okay.
So I probably had a better experience than a lot of younger individuals are navigating today.
And what do you think the key challenges are in the market, and perhaps where these have come from? What's the wider economic landscape causing these specific issues?
I think one of the main challenges is definitely individuals looking to buy at some point.
Okay.
They're renting and probably spending like up to 40%, 50% of their paycheck on rent, and then maybe only being able to put away £100, £200 a month to save towards potentially buying a property.
Yeah.
And when you think about that from a financial perspective, it's already very skewed. You're saving you're paying thousands of pounds a month for rent, and then only able to save a couple of hundred towards buying a property. And then when you think about how much you need to save for this deposit, it starts to feel a little bit impossible. And not only is there the financial impact of it, there's the psychological impact of it, because it's like, I'm putting away £200 a month to save a 25k deposit. Is this really going to happen for me, or should I just bin it and just put that £200 towards my well-being?
Okay.
So it definitely is interesting and a testing time for individuals who have that desire to go on to be on the property ladder, own a property of their own, but navigating a difficult rental market where they just need to pay to live.
So what do you think are the biggest budgeting challenges for people at the moment? Obviously, there's lots of competing things going on with the cost of living and things getting more expensive. So how do you think people are kind of managing this really tricky environment to budget with big rent costs, as you say, when it's taking a big part of people's salaries? Because that's really tough.
Yeah, it's a lot. And like I said earlier, it's that element of saving so much, trying to save so much towards owning your own property maybe, but also having to pay for things that are, right now are a necessity. Maybe it's rent, maybe it's just your average cost of living. And I think there's that impact of maybe, you know, I want to get on the property ladder, etc. But not everyone wants to be on the property ladder, but people are still bearing the impacts of, you know, cost of living, etc. And I also think where things have been so turbulent in the last couple of years, I mean, if you've been awake for more than a second, you know that it's been turbulent. There's this impact on people, what people are now defining as a good quality of life. So what feels like a good experience right now? Is it experiences? Is it spending time with family, loved ones? Is it spending money on the things that I like? And that is continuing to shift for a number of people. And I find where we've gone through, you know, a pandemic and so forth, people have found real value in experiences, but experiences cost money.
Absolutely.
So when you're trying to navigate enjoying the now and still feel like you know, what you're working towards and what you're working on and the space of life that you're in right now is worthwhile and it's enjoyable and it's not doom and gloom. But you've got to put that money towards buying a house or whatever it might be. It's a real difficult space to be in. And I think ultimately there's no one right answer.
Yeah.
It comes down to what your priorities are, what your preferences are, and making the best informed decision for your personal circumstance, which is why I really echo being well informed as far as how these things actually impact any one individual, because you can make better informed decisions based on what you prefer.
Absolutely. Whether that's am I going to save for a house or am I going to go on holiday next week?
Exactly. Or both.
Tricky decision. Okay. So what would you suggest looks like a kind of sensible rental buffer for people?
Yeah.
So how can renters kind of be sure that they have enough money aside in case they are seeing increases? Obviously the Renters' Right Act should help.
Yes.
But what is a sensible amount that people could maybe keep aside to protect themselves?
Definitely a bit nuanced based on, you know, any one person's income and capacity. I think an attitude that renters could probably adopt is having an emergency fund just as much as the next person who owns a house. We speak so much about owning a property and having an emergency fund in the case of incasities. And if you own a property, you know, you're responsible for everything. And there's always something happening.
Oh, yeah.
But I think the same is true for renters. Have an emergency fund in case your prices do change and you need enough time to maybe find an alternative property. But in that time, you still need to adjust to the new price that you need to pay for rent, etc. And whether you have an emergency fund of 3 months or 6 months, having something in the background is really helpful. But then if you want to do the actual math of it, maybe as a ballpark, think about if my rent price was to increase by up to 20%, could I still maintain my day-to-day activities, my fixed obligations, and am I able to leave a buffer for that scope of change if it was to happen? I think that's a really helpful way to prepare and think about things, because it just means that if that circumstance was to occur, you're not in this pit where you're like, I have no way out, I have no choice. And actually having that buffer, the emergency fund, doing the math, gives you that freedom of choice to say, actually, not the most ideal situation, but there's things that I can do because I've prepared for this.
And what else should renters kind of be conscious of? Obviously, if you're a homeowner, you're thinking, okay, my dishwasher might break and then my washing machine might break at the same time. So that's going to be 2 big costs. What, apart from rent increases, should renters be aware of that they may need to have a bit of buffer for? Is there anything else?
I think, I'm not too sure if there's anything that comes to mind straight away, but what you do have is sometimes the actual maintenance cost of a property can go up. So maybe the bills go up, energy bills have been rising, for example, and that can impact landlords. And they might not necessarily say to their renters that, hey, we're going to increase your rent, they might not say to their renters that, hey, you need to pay X amount towards this bill, but they'll bake that into the rental price.
Okay.
So for renters, again, you have this information asymmetry where they're just getting hit by rental price increases, but not necessarily because the interest rate has gone up. But actually, there's so many other costs that come with maintaining a property as a landlord that they will find a way to bake that into the rental price. So you just need to be aware that literally anything could impact the price that you pay for rent, and having that buffer would basically offset that just a little bit in case you was to encounter that circumstance.
Yeah, I think that's really interesting, because I think people often feel that rent increases do come out of nowhere.
Yeah.
And maybe partly that is the fault of the landlord for not explaining, but maybe if renters kind of understood slightly more how these rent prices are created, maybe it wouldn't be such a shock. Do you agree?
Yeah, definitely. And I think with the Renters' Rights Act that will come into play, that will start to soften that information asymmetry and bring more renters out of the dark and up to the forefront of what's actually happening behind the scenes and the level of communication they need to have with landlords. And again, a big part of that is because landlords have no obligation to share specific information. But I think even if they did have an obligation to share a certain level of information, I'm not sure how much difference it would make to the actual circumstance of rent increasing. I think that will still continue to happen because it just has to happen, right?
Yeah.
But it might bode a better relationship between renters and landlords, and people feeling a lot more positive towards the rental market than they maybe currently do.
Okay.
So that could definitely have an impact, and I guess that's not something to take for granted.
Earlier today, Tom tested you with some rapid fire questions. So let's have a look and see how you got on.
Fish, What a pleasure to have you today. I'm Tom, Chief Quizmaster. Now, Fitz, you've had a very impressive career. You've worked in banking and finance, you're a chartered accountant, you're a founder, you're an influencer. But today, I have devised possibly the greatest challenge faced by any professional of your calibre.
Okay.
A selection of multiple choice rapid fire quiz questions. Are you up to the challenge?
I'm going to have to be.
Are you sure?
I'm going to have to be.
Brilliant. Let's get started. As of the 5th of February 2026, what is the bank rate, otherwise known as the base rate of interest? Is it 3.5%, 3.75%, or 4%?
It is 3.75%.
Correct. When the bank rate decreases, what happens to the cost of rent? Do rent costs decrease immediately? Do rent costs fall slowly over time? Or do rent costs still increase, but likely at a slower rate over time?
C, it lightly increases.
Correct. True or false? Falling inflation rates guarantees that rents will also fall.
False.
Correct. What does price stability mean? Does it mean prices are staying low, prices are falling, or prices aren't changing too much?
Prices aren't changing too much.
Correct. You're on fire. What is the Bank of England's inflation target? Is it 0%, 2%, or 4%?
It is 2%.
Correct. What was... Okay, now we're getting into the ones that you might not know.
Okay.
You know, I've kind of...
It would be concerning if I didn't know those ones,
Yeah.
by the way.
Yeah, from your very impressive career, I would be raising an eyebrow. But, you know, it was a bit of a warm-up.
Okay.
What was the UK average monthly private rent as of December 2025? Was it £900, £1,400, or £1,900?
I'm going to go with 1900.
Incorrect. It's
Okay.
£1,400.
Okay.
In 2024, what proportion of household income did the average private renter spend on rent in the northeast of England? Was it 20%, 40%, or 64%?
Let's go with 40%.
Incorrect. It's 20%.
Oh, okay.
But I've reeled you in here. In 2024, what proportion of household income did the average private renter spend on rent in London?
Okay.
Was it 20%, 42%, or 64%?
42%.
Correct.
Yeah.
And the England average is 36%.
Not surprising for London then, is it?
No,
Yeah.
not remotely. What does financial stability mean? Does it mean the financial system can provide essential services in both good times and bad? No risks are being taken by financial institutions, or the economy is always growing?
A.
Correct. True or false? To fulfil its financial stability objective, the Bank of England must ensure that no banks can ever fail. True or false?
There's nuance to that question, by the way.
There is nuance, but must the Bank of England ensure that no bank can ever fail?
I'm going to go with false.
Correct.
Yeah.
Instead, the bank makes sure that if a bank does fail,
Yeah.
vital services are not disrupted.
Exactly.
What was the average UK house price in November 2025? Was it 270 grand, 340 grand, or 490 grand?
It's A.
Correct.
Yeah.
In 2024, the most expensive street in the UK was Knightsbridge in London. What was the average house price? Was it £21 million, £35 million, or £49 million?
Those are some big numbers.
They are some big numbers.
I'm going to go modest and go with A.
21 million?
Yeah.
Locking it in?
I am now.
Correct. In 2024, which country had the highest proportion of its population living in rented accommodation in Europe? Was it Poland, France, or Germany?
I don't know much about Poland.
No?
For that reason, I'm going to put them to the side.
Okay.
Sorry, Poland. And I'm going to go with Germany.
Germany. You are correct.
Wow.
And that's 53% of its population live in rented accommodation. Poland is only 19.
Ah, okay. Shout out Poland.
Now, this is very hard.
Okay.
But I have faith, okay? The transmission mechanism through which changes in the bank rate affects rents, bills, and consumer prices is known as what? Interest rate contagion, interest rate pass-through, or interest rate spillover?
Interest rate pass-through.
Correct. I knew you'd get that one.
Well, banking and finance,
There
what can you say?
You didn't let me down. But for the final question, it's the wildcard question, the trivia question about the BOE, the bank. Until what year were some special visitors to the Bank of England required to wear top hats? Was it 1956, 1992, or I'm fooling you, they still do?
I'm going to go with A.
With that 1956?
Was that the... Yeah. Yes.
Is that your final answer?
What was B?
1992.
That feels too late in the game.
Mm-hmm.
I'm going to stick with A.
Incorrect.
Okay.
It's 1992. And no, we don't have to wear top hats. We're human and humble.
So your top hat this morning, that was...
I was top hat this morning. I took that off to be in the room, yeah. Anyway, Fis, thank you very much. That was terrific fun.
Thank you.
Thanks, Tom. That was great. What are 3 things that everyone should look for? Just 3 very specific, simple things that every renter, when this Renters' Rights Act comes out, what are 3 things they should be aware of?
I think, first and foremost, read your agreement lease completely. I think
Sounds simple.
Yeah, it sounds really simple. And I guess, again, this is back to the point of the more you know, the better informed decisions that you can make. And the reason why it's important to read that is because you want to know what your rights are.
Yeah.
You want to know what your landlord's rights are.
Yeah.
And those pieces of information will give you a bit of a foresight into if X was to happen, what leg do I have to stand on? So really, really important. The second thing I would say people should think about is understand what the base rate actually does for you as an individual. I know it's not the most exciting topic.
Depends who you're asking.
Well, exactly.
You are at the Bank of England, Fis.
Right, exactly. I know it's not, the topic that people wake up and want to read about, but having a relatively broad knowledge of if this happens for the Bank of England, the base rate, what does that mean for me?
Yeah.
Just understanding that narrative will, again, allow you to make these better informed decisions. And then lastly, I think having a good understanding and keeping an eye on the landscape of how you save your money. Because in many circumstances, I speak to so many individuals who are preparing to buy a property, for example, or even just renting, but they're not utilising the proper products that are available to them to get the most for their money. The high yield savings account, maybe a lifetime ISA if it's applicable to them. And again, having that information, doing the research, staying in tune with the things that are actually happening and how that impacts you, allows you to make better informed decisions. And those better informed decisions cost you money.
Yeah,
they're able to save you the money that you would otherwise be subject to paying if you didn't understand what was happening. So that would be my recommendation.
Just to wrap up then, what would you say everyone should take away from this conversation? I think I know what you're already going to say, but one thing everyone should take away from our conversation today.
Do some research. Just I mean, and this is my job, right? I try and provide trusted financial education to individuals so they can make better informed decisions. And my echo to people would be to try and acquire a lot more information than you currently have today, because knowledge is power. As a cliche as that sounds, it really is. So if you haven't learned something about today's podcast, which I hope you have, try and understand the impact of the base rate, maybe what the Bank of England actually do and how that might affect your life going forward, the Renters' Rights Act, if it applies to you, understanding what vehicles you can best use to supplement your circumstance, whether you're saving towards a property, whether you're just saving for an emergency fund, whether you're an owner of a property or a renter. Information is key.
Yeah. Amazing. Thank you so much, Fis. Thank you so much for joining us today.
Amazing. That was
great
great
to chat to you.
Thank you so much.